What if I told you that you might spend your entire career working incredibly hard only to build someone else's empire? Welcome to today's deep dive. We're looking at some really fascinating notes on Robert Kiyosaki's concept, mind your own business. And our mission today is to explore the critical difference between your day job and your actual real business. We want to break this down in the absolute simplest terms possible, especially if you are, totally new to thinking about finance.
Yeah, and what's fascinating here is that most people completely conflate their profession with their actual business. I mean, if you ask someone what their business is, they usually say, oh, I'm a banker or I'm a software engineer.
Right, but that's just their job.
Exactly. It's just their job. They are managing someone else's business, not their own.
Okay, let's unpack this. Because if I'm, say, putting in 50 hours a week at a firm, I'm obviously generating a lot of value. How do the sources we're looking at frame where that value is actually going?
Well, the notes highlight a somewhat harsh reality. Your employer pays you basically the minimum market rate necessary to keep you in that seat.
Right, just enough so you don't leave.
Exactly. But the surplus value you create, the actual real wealth that funnels straight up to the owners, you are effectively spending your prime years building their asset column, not yours.
Okay, but wait, isn't there a bit of a flaw in that logic? Because if I realize I'm just building my boss's empire, the temptation is to just immediately quit and go start a company.
Which is terrifying for most people.
Completely terrifying. And not everyone has the safety net to take on that kind of risk. So how do the sources suggest balancing the daily grind with this realization? I mean, should you just quit?
No, absolutely not. They emphatically advise against quitting. You still need that cash flow to pay the bills and survive. Instead, the strategy here is what they call the silent wealth method.
Silent wealth. I like that.
Yeah, you keep your day job, you let it pay your rent and feed your family, but you patiently use your spare time and your extra money to quietly build your own asset column on the side.
Here's where it gets really interesting to me. That requires a massive mental pivot. Instead of viewing your job as your entire identity, you have to look at it purely as the funding mechanism for your actual business.
It completely changes your relationship with work. The friction comes when people start making good money at their job and immediately misallocate that extra cash. They fall into the classic trap of confusing a high income with actual high wealth.
Right, because society basically tells us that having a massive primary home or a really expensive watch, those are the ultimate signs of
Oh,
success.
absolutely. We all know that person who gets their first promotion as a middle manager and immediately goes and leases a BMW they can barely afford just to flex in the company parking lot.
Yep, we definitely all know that guy.
But Kiyosaki's notes argue those are not assets.
Yeah.
They're just liabilities dressed up as status symbols, and they drain your wallet every single month. To keep it super simple, a real business asset is anything that puts cash in your pocket without requiring your daily physical presence.
Like what specifically?
Things like stocks, bonds, rental properties, or even royalties from something you created.
Okay, so if you're listening and you want to implement this silent wealth approach this week, how do you actually execute that without getting totally overwhelmed?
It really just comes down to a sequence of 3 practical steps.
Mm.
First, you mentally reframe your current job. Stop seeing it as your ultimate destination and start treating it as the primary investor in your real business.
That makes perfect sense. And once that mindset is there, you have to free up the actual capital to invest, which means hunting down those fake wealth liabilities you mentioned earlier.
Right. That's the second move. Audit your spending with this new lens. Just find and cut out one liability you've been holding on to simply to look successful to other people. It could be a premium car or honestly even just an expensive subscription you keep for the status.
Which naturally sets up the third step. You take those exact dollars you just saved and deploy them into your first true asset. Even buying a fractional share of an index fund means that money is finally clocked in and working for your business rather than someone else's.
And if we connect this to the bigger picture, it becomes incredibly powerful. You don't need millions to start. You just need to get the money onto your side of the ledger. Because once it's there, time and compound growth do the heavy lifting for your wealth.
The earlier you shift your focus from relying entirely on a paycheck to feeding that asset column, the sooner those assets can scale up to eventually replace the job entirely.
Exactly.
It is such a profound shift from playing a part in someone else's script to writing your own. So we'll leave you with a question to ponder today. If the truly wealthy build their empires silently by avoiding those flashy liabilities, what is one status symbol in your own life that is secretly stealing your financial freedom?